Good morning, Predicted Trades family. Hope everybody's doing well. I hope you all had a great weekend. Let's dive right in with a quick recap of last Friday at least. So the morning was a little slow, provided some longs, some shorts, and basically wedged for the first hour or so. Then around 11 a.m. we started to break out and push our way up to our key levels above, setting a new high. And, all in all, we had a pretty strong week last week. Oh, come on, Toss. There we go. Those CPI numbers came out. We took off from that 41.36.5 and made it up through our key levels over 4,200 up to our zone around 42.60, 42.73. Also, when we were kind of settling, or you could say slipping, into the CPI numbers, we saw POC for the month establish itself around 41.20. It jumped up to 41.36, then back to 41.20. And that's where POC stayed as we took off to the upside. On the CPI numbers, on, good numbers that inflation might have peaked, might be coming down a little bit. And we made it up above that 4,200, which our daily 8 has now caught up to. Our daily 15 sits near that 41.36.5, and our daily 21 is right near that 41.05, 41.08, and probably by tomorrow it will be at POC, 41.20. Whenever the mean catches up to POC after we've pushed off of POC, you want to take note, because if we have a quick reversion to the mean in a day or two, we're likely going to come right back to POC and right back to the daily 21 to kind of reset before heading higher. Before we dig in too far to what we have going on this week, what we can look forward to this week, let's take a quick look at our economic calendar. We've got a little bit today, manufacturing index. Tomorrow we've got building permits, housing starts. The big one, though, is Wednesday. We have FOMC at 2 p.m. No Powell talking this time. Looks like it's another Fed speaker. So then we have our jobless claims on Thursday, and not much going on Friday. So we have our FOMC this week. It is also option expiration this week. The monthly OPEX. So, anytime it's an OPEX week, we should prepare ourselves for the potential of chop and going sideways. We've arrived at some key levels. We do still have that key 4,300 above near our third Keltner. So if we are going to try to see some continuation today to the upside, the target to get to is that 4,300, that third Keltner up. And basically, I'd be looking for ES to stay above 42.50, kind of where these candles closed. and push off of 4250 to complete the journey to 4300 in that third Keltner up. With FOMC on Wednesday, we could easily start a fade into FOMC. You know, something kind of like that. And we could start a little fade into FOMC. Maybe settling back near 4200 to tag that daily 8 before heading higher. I would think today if we start giving out 4250, we might start that journey back to 4220, 4200. If we can hold 4250, we can try to push higher through this overnight trend line and complete that journey to 4300. And remember, by tomorrow, the daily 21 should be catching up to POC, which is still down at 4120. So it could mean a reversion to the mean before FOMC. It could mean FOMC numbers come out, we revert to the mean before heading higher. We'll have to see what we get. Work with me here, Toss, darn it. There we go. So we do kind of have a trend line that carried us up that we bounced at a couple of times on our journey up. It looks like today the bottom of that trend line is near 4205. Also near this daily 8. And if we're going to break down and revert to the mean, we have to break that trend line. So whether it be today or tomorrow, we could get a test of that trend line. And it might kind of give us our first warnings for a reversion to the mean. Our 4 hour 45, which is, if you tune in regularly, I like to follow the 8/21/45 on most time frames for a trend change. So on the 4 hour and ES, that 45 is almost caught up to our 4200. It's at that 4187 right now for today. So we haven't really started to change trend until we break below that. So let's see if today we can try to hold 4250, push through our overnight trend line to get up to 4300, or if we keep stuffing that trend line, start to break 4250 and roll back to at least test the 4 hour 21, 4226. If that gives out down to 4200, 4205 to test trend line that's carried us up here. So yeah. And probably worth noting that that second Keltner is there at about 4240. We could slip through 50, hit 40, get right back above. Well, let's see if they want to continue up and get that 4300 tap before we start taking a break on this drive. NQ. For NQ. NQ already trying to get through trend line when connected with Fridays and the overnight high. I could, I guess, update that to say this high and that we're still below it, which I'll do going into the cash session, just to say that breaking through this is truly trying to break back up to the upside. Let's see, we've got a 30-minute and a 1-hour squeeze starting to form that can help give us some direction. If we can hold squeeze bottom, stay above this 531 and get through the overnight trend line, we can continue the journey up to test that 1-hour squeeze top around 13,600. And try to make our way to like 13,700. If we continue to stay under that trend line, start to lose this 531 and some pre-market lows, then we'll start making the journeys back to 460 and this 388 and potentially that daily 8, which is now caught up above 13,300. Also caught up to those lows from Thursday. So use that 30-minute and 1-hour squeeze as a guide, as a range. Play the range till it breaks. If we break pre-market low, can start to engulf the progress from Friday. If we can hold squeeze bottoms, start to get through trend line. We can try to get up and set new highs and push to that 600 or 700. The ruddy has arrived to the daily 200. First index to do so. Slip back below. And just like the other indices, if we can push, get through some overnight trend line, and get back above the daily 200 here, we can continue to try to push through Friday's high to that third Keltner, and up to 2030, 2050. As you can see, we're trying to hold 2,000. At the pre-market lows, you can see the closes of these candles is right around 2,000, so I'd be watching that as a basis. If we start to give out 2,000, we can engulf Friday back to that 1980. But if we can hold 2,000, start to push through overnight trend line and that daily 200, we can continue and at least complete the journey to third Keltner and Friday's highs. On YM, you can see that this 32,900 definitely held us down. And once we found once we finally broke out from it, kept the journey going up here to a little over 33,700. I'd say YM kind of the weakest this morning, maybe pulling back the furthest. And, engulfed a good portion of Friday's progress. I'd say let's see if this 33,500 psych level can hold. And yeah, I'd say this overnight, this pre-market low, which also aligns with this midday rejection point. There we go. It already looks like we're about to give it out. So let's see if this 500 up to 520 can hold. Maybe even as low as this 480 where this daily Keltner is. Should this little zone of support give out, we'll likely engulf Thursday and Friday's lows, get back to the daily 8. And this trend line that we are, provided some support. We broke through a little, but it can help provide a target to the downside near that daily 8 to test both for a bounce if we start to give out this zone around 500. If it can hold and we can get through trend line from overnight, goal to get back to Friday's high and that daily 200 up above at 830 with that third Keltner at 920. So if we can find some support, see some continuation, we know our upside targets if we start to give out our support. We've got our downside targets, which, basically just get us back to where we settled after CPI. Now, should that start giving out, then we're going to be talking about reversion to the mean this week. Apple, Apple, Apple. Let's see. We've made it to our key zone. This 171, 172. We can go take a quick look at this just to show you guys. So you can see once we get above this zone at 171, 172, it tries to act as support and then rejection. We got above it on that March rally and held it as support multiple days. But then once we gapped down below it, it became resistance, resistance, resistance. And we have not seen it in quite some time. But we have finally arrived back at it. So Apple itself, not too far from high, and has definitely been leading the way on this rally back. So let's see if now that we've arrived at this zone, we start to reject it, get a reversion to the mean. The 21 is now crossing the 200, right back at our key level of 159.5. So if we start to see some slippage in the market and individual names this week, that's kind of the short I'll be looking for, is from our zone back to our last key level, which now is overlapping our daily 200, daily 21, and POC's at 164, so halfway there. So we could magnet down to POC, accelerate through to the mean and our key level, then do the same journey right back up. So yeah, if we can get through, if we can continue to hold this zone, get through Friday's high, maybe the next target would be like a 175. But if we can't get through 172, we reject down to 173, start to lose it, then we'll likely start to engulf below 170. And then we're talking about reversion back to the daily 8 or the daily 21. And we still have POC, kind of near that 165. Looks like ES is slipping a little bit more. AMD gave us a couple of nice pushes off of our zone around 99, 98. Pushed off, then came back to settle. Pushed off on Friday. So if we start to give out the overnight, this wedge, as you can see, we're going into the day with a nice little wedge there. If we start to give that out and lose this 100, this 99.75, likely coming back to this zone. It's 98. We have the daily 8 in there as well, which will likely be stepping up to 99. If we start to give out the daily 8 in this 98, then we'll probably roll back to the daily 21, which will be stepping up near 95 today, probably that 96 tomorrow. Amazon, decently strong on Friday, but overall, it's just arrived back to the previous week's highs. Slipped Monday, Tuesday. Man. Popped up on that CPI data, but did not really break out, and then kind of consolidated in this range from 140 to 143. And now we can see our squeezes are settling in there as well. So let's see if we start to give out 142, likely roll back to 140. The daily 8 will be stepping up to about that 140 and the bottom of the squeeze. If we can hold 142 and see a morning pop to cover this gap down. If we can get above 143, 144 will be at the top of the squeeze, and that daily 200 will be around 145 as our upside target. And if we get through that 145, that daily 200, likely going up to that third Keltner, which, jeez Louise. Which sets up around that, 147.5, 148. BA. Not a ton of interest here, just basically watch it for a gauge. If we, kind of dump on this gap down, and 167.5 starts to give out, 167, this daily 8, we could see be a dump out of these squeezes back to our zone below. The daily 15 will be stepping just above that zone. The daily 21 will be stepping just below that zone. So overall target, if we start to break down the market, Like we talked about on Friday's prep, after we made this run up above our key level on Thursday, we could say as long as that level held, we could get a nice ramp up to 200. Didn't quite make it to the 200, made it to that 196. Looks like we are gapping below that key level, below Friday's actions. And, Cat's been a little weak lately, so if we continue to stay below this level, continue to reject, we could see Cat start to roll back to the next key level below. Our daily 8 and daily 50 are crossing over each other and going to be near that 190, 191 as our downside target. But it did leave POC up at 196, so if we can get back above 193 and hold, we could see a push back to 196 in an effort to get to that 200 above. Google giving us this nice ascending wedge. You could probably even connect that over to some of Thursday's lows. I'd say if that starts to give out, then we lose 120.5. Likely going to start to roll back. If we ultimately give out 120, likely coming back to this daily 8. Which will probably be coming in around, 118.75, 119 today. And should we start to lose that daily 8, we have got our daily 21 down near this 116. GS, nice breakout of these squeezes, getting above that 340, pushing through the daily 200, and now flagging. So the range has been set, that 350 to 354. We start to lose 350, coming back to the daily 200 and daily 8, which will be close to crossing today around 344. If we can hold 350 and start to pop, looking to take out Thursday's high in an effort to get to that 360. On JPM, same thing, started to get going nicely to the upside after CPI. Close to firing this daily squeeze. Basically, it just has to stay above 120 today and sit up here, and that daily squeeze will probably start to fire to the upside. If we start to give out 120 and our trend line from the lows that got us up here, then we'll likely be seeing some reversion to the daily 8 or the daily 50 and 21 that sit down near this 116. Also left POC back there as well. So we got POC sitting actually just a hair below the daily 15. So if market starts to roll and we start to give out trend lines from lows, this could make a quick trip from 120 back to that 115. Meta, not a huge interest for me. As you can see on Friday, didn't really do anything. After that CPI pop, only got a little further and hit that daily squeeze before settling. And as we know, when we hit a higher time frame squeeze like that, we can see a reversal. So nicely, it settled into this flag, this wedge, and this range with this 30-minute and 1 hour squeeze. So should we start to give out that 30-minute squeeze bottom? Around that 177, 178. And this 1 hour squeeze bottom around 176. I'm sorry, it's a 1 hour and a 2 hour. If we start to give out that 176, we could start making the journey back to the daily 8 and the daily 21 and 50 that are crossing over each other near 170. If we can get through Thursday's high around that 183, looking to get to that 185, 186, that squeeze top, and second Keltner, if we can clear that, third Keltner up at 192. Microsoft pretty darn strong on Friday. Let's see if our overnight lows can hold around 290. If we start to give out 290, likely rolling back to about 287, 286, where that daily 8 will be stepping up to. We do have our daily 200 just above at 294.5. Our third Keltner at 296 on the journey to that psych number of 300. If we can get going to the upside. And if today or tomorrow we start to lose that daily 8, if we are coming down to test it, we could see that 21 around 276, 277, and we do have POC around 282, just below the daily 8. Netflix, in a nice wedge bull flag. So you can draw your trend lines from highs. If we start to break through that to the upside, get through 250, looking to get to that third Keltner around 253, 254. But if we start to roll over and give out trend lines in that 244, likely coming down to this 240, 238 levels. NVIDIA reports earnings next week. Well, I always forget until I look at the chart, except they kind of already released some of the earnings. So we've already had our reaction, and we've come back up. Let's see if we can stay above 184. If that starts to give out, likely coming back to 180. These key moving averages. POC, it says, is up at 185, basically kind of where we're trying to hold. So let's see if we can hold 185 and try to push through that overnight high. And a bit to get back to 190 where it kind of sold off from, and this daily squeeze top around 196 and that psych level of 200 above. QQQ pushed off of our key zones around 318, got up to 330. Yeah, I'd say if we start to lose 330, 328, we could come back to 325, test some of these lows. At daily 8, we'll be stepping up near 324, 325 today. Should that start to give out, coming back to 320, and then that 318. Looks like, yeah, the daily 15 should be stepping up just above our zone. The daily 21 likely stepping up near this 315, just below our zone. for some downside targets. Roku, not a real interest for me. It's just sitting already on the daily 21, meaning it was playing catch up while everything else was pushing off the 21, wedging in a squeeze on every time frame. So not a huge interest for me. Shop, let's see if 40 can continue to hold, if we can get through 41.5. It's a journey back to try and test this 45 and that Keltner above. If we start to get about 40, likely coming back to the 21 around 38. That daily 50, near 35.5, 36. Snow, they report next week with NVIDIA. And not a ton of interest here. Let's see if I can hold the daily 8. Try to push off of this 165 to get through 170 and a bid to get back to 180. If it starts to lose at 165, can easily come back to the daily 21, which is going to be close to 160. SPX. Always mark your gaps. So as you can see, if we start to get down near 42.25, we'll be near a little gap. So we got a little zone there. If we get down to it, we could hold that gap and push back up. We could also get to that gap, settle for a minute, and then dump right through it. We also have a pretty sizable gap here from that CPI, which I'll also mark, because if we get back to and through this gap, we will technically be back at that 41.20 where PAC sat on ES. So if we do start to look weak and roll over, we could go back and fill both of these gaps for a full reversion to the mean. And we do have a couple of little gaps below that as well. Looks like we'll be gapping down about 30 points. Near that 42.50. Let's see if it can hold. If not, we can come down and test this gap level. And if we can't hold it, we'll likely vacuum right through it to 4,200. If we can hold one of those levels, looking to get back up and take out Friday's high, where we topped out at that third Keltner. We do have the daily 200 above at that 43.30 should we actually get to breaking out back through 42.80 and through that psych level of 4,300. SPY. So SPY, nice push up through our little zone at 423, up to our key level at 426, and that third Keltner. As you can see, we tapped that third Keltner, settled there on Friday, and now we're pushing back off from our 426.36 down, almost to our 423.53. Let's see if this zone can hold us and send us back up to test these key levels. If the zone starts to give out, likely coming back 419, 418, where this daily 8 will be stepping up somewhere in between these two. If we start to lose this zone and area and daily 8, we can see that the daily 15 just above our 410 and the daily 21 will be coming up pretty darn close. Also, POC is at about 411.5. So, if we start to lose this zone, it could cascade to the next level, daily 8, next level 414, pretty big. We could go sideways just enough so that these moving averages could catch up to that 414, 410, with that 411 right in the middle of POC. So, big old pocket down here if we start to give out and roll back. Tesla. We've got this as our last full week until the stock split, which will be next Thursday. One of the only names that is actually trying to push this morning and get back to where it was. We do have a number of squeezes in place. That daily 200 around 910. Already trying to push off of 900 this morning. Let's see if 900 can continue to hold and push us through 910, 918, 930, where that second Keltner is going to be catching up to today. Ultimate goal, if we can get going to the upside and take out 910, 918, 930. We've got this high of 940. On a bid to get back to that 965, where that third Keltner sits. But if market's weak, we'll likely run into these squeeze tops, that daily 200 reject. So if we can't get through 910 and roll back over and lose 900, we could vacuum quickly back down to this daily 8 and 15, back at 865. And if that trend line gives out, once we get down there for a test, we could get a full reversion to the mean back to 840, bottom of that squeeze. And we do have POC around 900. So let's see if POC can hold us up, send us higher, or if we lose it and it accelerates us lower. And VIX. VIX made it down below 20 for most of the day on Friday. Almost tapped 19 even, but tapped that second Keltner down and this daily squeeze bottom. Now we're gapping up huge, even though we're only down a little. So let's see, if we're going to see continuation to the upside, we need to see VIX quickly roll over and lose 21, the daily 8, get back below 20.5, with a goal of getting back below 20. Need to see all that for continuation to the upside. If we're going to roll over, or keep rolling over from this overnight gap down, we'll likely see VIX hold this 20.5, this first Keltner down, and this daily 8, and push off of this zone to get back above 21.5, 22, daily mean at 22.36, and 22.50, the ultimate goal to get back to if we're going to start rolling back today to some moving averages. Yeah, let's see if VIX can give out and go back to fill the gap, allowing everything to pop up and fill its gap and try to push to that next target. But if we just keep resisting and VIX just keeps on an upward trend, we'll see some rollback, some VIX popping higher. So hopefully this is helpful. Thanks for tuning in. We'll see all you guys in chat today. Good luck. Remember, no beast, no feast.